Welcome, everybody, to another eye opener. We're really excited this morning. We've got Ian Cooper here with us. It has been great reading all the articles for the chart of the day. I'm addicted to that newsletter. You get it's so quick, it's so accurate, and it's on point. So bringing Ian in today is just really a treat. Um, the thing that I love about the chart of the day is that it uses the approach that Ian has, where he takes big news events and turns them into trading opportunities. And it's not always what you think. You don't think, oh, well, they just announced that it's something about the tariffs and that's going to drive the market this way or that way. What he does is he looks at that, he sees the way the herd mentality is going to migrate as a result of that big announcement. And then he said, all right, don't be the first mouse, wait, let the herd go in their direction and grab the cheese after they get whacked. So really love watching that chart of the day. So Ian, great to have you here, man. Thanks for joining us.
Thank you for having me.
Yeah, we're going to go ahead and let me hand off, let you share your chart if you want. We're watching the news this morning. Walmart, interestingly enough, announced its earnings, and kind of a very cautious output from that earnings announcement. Looks like they had mixed results, but also that they're warning that prices will have to go up. I think they're kind of setting the groundwork for to have some flexibility as these tariff discussions continue to shake out. Everybody's optimistic right now, but the uncertainty is the only certainty that we've seen so far this year. What's your take on it, Ian?
Well, the other day, I mean, a lot of the fear that was out in the market has kind of dissipated, at least temporarily, for the next 90 days. The tariffs on goods coming in from China will be tariffed at 30% instead of 145%. The goods going into China will be tariffed at 10% now. That all of that's going to last for 90 days. But right now, there's still fear that after the 90 days, what happens next. So that could raise some of the volatility and some of the a lot of the uncertainty which markets really can't stand. And so, as a result of that, companies like Walmart are starting to raise prices, as they just warned that they would do this morning.
Yeah, just pulled up the chart here and put it up on the screen and kind of taking a look at a handful of things. I'm going to add one of your favorites to the bottom here, the Williams percent R. No, thank you.
Yeah, what's nice about Williams percent R is that typically that indicator, if you watch the chart, that will move higher and lower before the actual stock itself moves higher or lower. So it's a great indicator of what may be likely to come.
Just pull this out, log in really quick, you know. Go. And that'll let me add that indicator. Um, yeah, so I think of the Williams percent hour as kind of like a magnet, and when I watch it, if it's on the top, it doesn't guarantee that it's everything's going to go in that direction. Might already be up there, but um, what I love about it is it shows you kind of there's a greater likelihood of it going up. You can see here when have that Williams percent R above, there's momentum to the upside. So it's just another piece to kind of confirm a move. But now we see it kind of getting back into the neutral area here. We also see a bearish crossover in the MACD. Um,
Yeah.
but earnings are just such a wild card. It's hard to tell.
Oh yeah, earnings are always tough to trade, but it'll be interesting to see what happens with Walmart when it opens this morning with the concerns that it's going to raise prices because of tariffs. I mean, I think the any raise that we'll see in prices will be temporary. I'm hoping that after the 90-day reprieve with current tariffs will be extended a longer term, which will add another significant boost to the markets and to retail stocks like Walmart.
Yeah, definitely. Well, I'm kind of hogging the room here, man. And we brought you in to get a sense of what catching your eye lately, or if there's anything that you wanted to bring up and kind of share with everybody. I know that there's the handful. I've been kind of watching the chart of the day and kind of what you're talking about in some of the services. So, but didn't know if there was a chart you wanted to share.
Actually, would you mind pulling up the VIX, where it's a symbol? It's $VIX.
Yep. There we go.
And we can see here that close to the start of the trade war with China and the rest of the world, the VIX exploded from about 16 to a high of just over 60. That was temporary, and then it pulled back because there's some certainty returning back to the markets. Right now, the best way to trade the VIX, because what happened when the VIX returned from 60 to its current price, its current value of 18.6, that's an indication of complacency here, and it puts it at a back to a historical mean, where you may want to consider picking up maybe call options or ETFs, such as on the VXX or the UVXY, for example, because usually when you have complacency in the VIX, that doesn't last very long, as you can see historically over the last year. When it reaches that point of complacency, it doesn't really last too long, unfortunately. But that's just the natural ebb and flow of the VIX and the overall market. We can go back years and you'll see kind of the same setups over and over and over again. But what's nice,
Like dribbling a basketball, I mean, it just
yeah,
bounces pretty
yeah,
steadily.
always all over the place. Really depends on what's happening in the news cycle, or what's happening geopolitically. But what's also nice about the VIX is you can kind of trade it uh, as you would with many of my other trades, with RSI, MACD, Williams percentage range. You can even throw in there, full stochastics, Bollinger Bands, other indicators that will confirm your initial uh, findings, for example. Now, when the VIX got too high here around 60.13, RSI jumped well above its upper line into overbought territory above 70. And you can see historically that every time the VIX pops on the RSI above the 70 line, it quickly pivots in the other direction, because it's letting us know, hey, fear is way out of hand here. It's likely to die off. And historically, if you go back, 10, 15 years, you'll see the same exact setups. And of course, we can then confirm it even more by looking at MACD or Williams percentage range. We can look at where it is in comparison to the Bollinger Bands at 2 standard deviations above and below the 20-day moving average. Full stochastics. If they're all aligning in overbought or oversold territory, that's where you may want to start looking at maybe, shorting the more, if it gets overbought, as it has several times, that's where you may want to consider going long the overall market and long beaten down stocks. Or if the VIX becomes oversold at complacency, where it is right now, that's where you may want to start hedging for the possibility of higher volatility. That's where you may also want to start looking into, maybe I should short the major indices. Maybe I should short stocks that are becoming a bit too overbought at the moment as well. So the VIX is always a great indicator to see exactly, what may happen next. And you can go back
Yeah.
50, 20 years and see the same setups over and over and over again.
Yeah, and one thing I think you're referring to, but it's easy to overlook, is that the VIX, when you see a chart and you see a ticker, and the VIX has a lot of characteristics, they're slightly different than like just a stock, right? But to your point of going back years and years, you'll see similar patterns. You want to look at charts that have consistent behavior, right? Then they become a little bit more predictable, and your patterns are much more reliable. There are charts that you pull up on various tickers, they just don't behave well, and they can be influenced by very random things that make them do erratic moves. When you're as a tech, using technical analysis, you really want to find the tickers that will behave consistently, and a little bit more predictable. And the VIX is one. But then the other thing, as you were also alluding to, is that it's a good place to start. If you're kind of what's the overall movement, where's the trend, where's the momentum in the overall market, and then I can drill down and look for specific trades that I can set up based on that, what the overall trend is.
Right.
It really works well for that.
Yeah, if you find, especially with the mega caps, if they're setting up technically the same way the VIX is, more than likely they'll trade along with the where the VIX is, and then we can include we can look at the DIA calls. I'm sorry, we can look at the DIA ETF, the triple Qs, the SPY, things like that to really get a good grip on where markets may be headed next. And you can even use the VIX kind of as a cheat tool to figure out what's going to happen next ahead of the rest of the herd.
Yeah, definitely. Well, and I want to remind everybody who's in here, if you've got questions, go ahead and chime in, throw them in the chat box there. The beauty of this is that it's interactive. We're just started inviting folks to be in the studio with us when we're recording this, and we want to hear what you're thinking about. We can sit here and preach from our position all day long, but if we don't cover what's important to you guys, I don't know that we're really bringing as much benefit as we can. Now, Ian, when you're looking at the VIX and you're looking at these indices and you see this kind of thing, where do you drill down to next? What's the next thing that you think, this herd mentality is going to help reveal?
Well, you want to jump in, usually you want to jump in after the herd has overreacted to an overbought or oversold situation, but sometimes you want to act before the herd wakes up to the opportunity. If we're looking at the VIX and it's either overbought or excessively in oversold territory, you may have an opportunity there. Once you have a good idea of where the VIX is with volatility, you can then start drilling down even more and looking at, okay, where does the Dow Jones sit? Where does the NASDAQ sit? Where does the S&P 500 sit? If it's just as overbought or oversold, you may have an opportunity sitting right in front of you. You can either, when the VIX becomes complacent, and the Dow, for example, is sitting at overbought territory, you may want to pick up a put option on the DIA. Um, you know, uh, when volatility got way out of control, some of our favorite trades to jump into most recently were artificial intelligence stocks like Nvidia, Apple, AMD, PLTR, things like that. They came back bouncing back significantly, and now many of those are considered to be slightly overbought. After some significant runs higher, especially PLTR, which is sitting at I believe right now it's at triple top resistance, which if it fails that could pull the stock back considerably. So with PLTR, yeah, you can see that right here. Right now, it just hit an all-time high, but it's also at triple top resistance. A lot of its technical indicators are screaming that it's overbought here, and if it fails at its current overhead price at triple top resistance here, it could pull back, significantly, at least temporarily, before turning even aggressively higher from where it is right now, just based on the AI story. And the reason the AI story exploded was because a lot of the AI spending fears were nothing more than an overreaction. All you really had to do was dig into recent earnings from Microsoft and Meta Platforms, and both of those companies just said that they were increasing their capital expenditures with billions and billions of dollars likely to go into artificial intelligence moving forward. So that kind of dispels the idea that AI spending is in the toilet, which it's not.
Yeah, that's a great point too. You see something, a sector, or a group of stocks like the AI bucket, and it's overall got long-term very solid momentum to the upside. And then you drill in and you use the VIX, you use charts like this, use the indicators here to then look at the patterns. You're seeing these buy opportunities as it dips down here, right? And now we're seeing it kind of at a really critical turning point. And, it hasn't quite revealed its hand yet. But to your point, watching it and kind of how it's going to deal with this triple top, that is a key point of resistance currently, but could easily shift to a point of support if it breaks through and hold it on the next leg up. And if it doesn't get through, the chances are it probably, it's unlikely based on the pattern that you see here. I mean, look at this long run up, unless something massively changes in the world. This thing is going to dip down a little bit, but then it's going to start going back to try to continue that rally and take another shot at breaking through that resistance level that we're seeing at the triple top. So, great tip to kind of start at the high level at the VIX and then drill into some of these individual opportunities here. That's great.
Yeah, it'll be interesting to see what comes next with that one.
Yeah, yeah. Well, great. Yeah, I know that you were talking about Apple, and I of course follow the Trade Alert 365, which I think is probably one of the greatest deals out there right now. I mean, you can jump into that newsletter for a buck. You renew for I think it's like 30 or 40 bucks or something like that a month after you've tried it and see what it works. But man, the alerts that you put out in there are just spot on. I mean, they're amazing. And you were looking at Apple recently and just I think nailed it pretty well if I remember correctly.
Yeah, we did. We did very nicely on that one.
Yeah, and it's great because you sign up in bam in your box, no nonsense. It's the chart. It's exactly what you need to do. It makes it really clear. Sometimes you offer a little bit of insight as to what you're thinking, but in that place, in that newsletter, that service, it's just right to the chase. There's no messing around. You get right to the action. And the other thing that I've always been really impressed with that newsletter is the results are right there. You scroll down and you look, you see everything, the good, the bad, and the ugly. There's definitely a lot more good in that newsletter, but everything has, you're going to lose a trade here and there. And that thing is really great at kind of keeping those losses tight and saving you to be into the next big winner that's going to come. It's got a great track record. It's been amazing.
Yeah.
I know I'm going on and on about it, but I am a big fan, literally, of Trade Alert 365. It's just a great service for people, especially if you're just starting out. Like I don't know, some of this stuff can be really overwhelming, and that one, I think it's the consistency of it, the format, the accessibility, just really great. So that's a great product. We'll put a link to that when we send the replay out to everybody, so if they're interested, they can check it out. So, you know, obviously, kind of moving into a little bit longer pattern, is there anything else catching your eye that you're kind of watching to see that could give you a sign of what to expect?
No, the VIX is kind of the key one, and of course, the technical pivot points and the major indices as well. Uh, right now, the biggest story in the market right now is the artificial intelligence stocks that are bouncing back. At the same time, you have to consider that after the significant bounce back over the last week or two, a lot of those names are starting to become a bit stretched. So we wouldn't really be shocked to see, at least an immediate term reversal off the recent highs. But we don't expect that pullback to last very long. Longer term, we do expect to see a lot of these names, PLTR, NVIDIA, Microsoft, Apple, you name it, running back significantly. Actually, can you pull up a chart of AMD and you can see AMD became ridiculously oversold, even though this is a massive stock, a massive opportunities. It finally bottomed out around 75 a share. And as I was just saying a moment ago, after that massive bounce back to more than 117.72, it has become technically stretched. On this chart, you can see that RSI, MACD, Williams have all become stretched as the stock begins to challenge its 200-day moving average, which is that red line there. And what's also nice is that we were able to pinpoint exactly where the bottom was here, at least, over the last several weeks, based on the dip in RSI, MACD, and Williams percentage range, which you can see on this chart right here. That dip was also our one of our many buy indicators. The other massive one was the story about AI spending dying off, which was turned out to be a bogus story. But yeah, this is definitely an opportunity you want to keep an eye on, both on the short side and the long side, long term as well.
Well, again, and that's the stuff that I love about what you do is, you're tying together the very objective. I mean, I look at technical analysis as pretty objective. It's telling you this is the way the price is moving, and but then you overlay that kind of news media frenzy type of layer to this, and you see things like, that AI. There's no way it's going to cool down. You see an article like that, if everybody reacts to it, it's like, oh, great, that's a great buy opportunity. And sure enough, it played out where it really, popped right after that. And good to get the tip that, it's probably going to have to take a breath after this big jump up. So you might want to be careful and let it play out before you look for another entry point or take the short side
Yeah.
for a shorter term trade.
Yeah, I mean, the herd will always lead you to opportunity because you can look at thousands of stocks every day. They're all driven by, herd mentality all the time. All you have to do is wait for them to, massively screw up in one direction, because the herd tends to follow each other, right off a cliff sometimes. And that's where your opportunity will always be after a massive overreaction or underreaction to a situation. All you have to do is pay attention to the technicals, and they'll show you exactly where the herd is making a mess.
That's awesome. Well, hey, I know we got a couple more minutes for the market open, and I know you got a lot that you are juggling throughout the day with the market. So I really appreciate you taking the time to jump on with us this morning, have a quick little chat, and cover this stuff. Love the stuff that you're doing. I'm a huge fan, my man. I really enjoy reading your stuff and being a part of getting it out there to everybody. So that's really exciting. So thank you again for coming on and joining us, Ian.
Yeah, thank you. These are fun.
All right, everybody, take care. Check on the TradeWinds Daily website for updates on more of these eye-opener, quick little market chats that we're doing. We hope to see all of you come back. Come on and join us in the mornings. It only takes a couple minutes, and we love to have all your questions. So jump on and join us. We'll talk to you soon, and take care.